Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Good morning, everyone, and welcome to Connecting the Dots. I'm Alex.
And I'm Morgan. It is Wednesday, February 4th, 2026, and we are live from the Snarful Solutions Group studios right here in Sacramento.
We have quite a show lined up for you today. We're going to be looking at a market that is just seeing red everywhere. And then a really fascinating story about the rise of what I'm starting to call the digital police.
Right. And to top it off, a moment of, well, radical honesty from the gaming world that I think we could use a lot more of across the tech industry.
Definitely. It really is a mixed bag today. You've got the financial volatility, the high-stakes crime fighting, and then these big software overhauls.
It's a lot. But before we dive into all that, let's talk about the world outside the studio window.
It is a messy one out there. If you're tuning in from the Central Appalachians or, the Mid-Atlantic, you're probably already sick of this weather.
Oh, yeah.
A wintry mix all day, so please drive safe.
And for everyone down in the Southeast or along the Gulf Coast, keep that umbrella handy. Looks like rain and thunderstorms are on the menu.
And snow for the Northern Plains and Great Lakes, of course.
Of course. But here in Sacramento, we started with some pretty thick fog this morning.
It was a little ominous on the drive-in, I have to say.
It was, but it's burning off now.
Yeah.
We're looking at a sunny high of 66 degrees later today.
Perfect. Just perfect California winter weather. But, while our weather is clearing up, the financial markets are still looking pretty cloudy.
Yeah, yesterday was a tough day on Wall Street. The Dow Jones closed down just a bit, maybe 0.24%.
Right, but the S&P 500 took a much bigger hit. It dropped nearly 1%.
And the big story, and this is really the lead domino for our first segment today, is Bitcoin.
It has been a roller coaster, just some serious volatility, and today it's opening around $75,657 after a really rough couple of days.
It's shaky ground. And navigating this kind of news cycle, it takes a lot of mental energy, which actually brings us to how we're powering through this morning.
It really does. We have a new partner for the show, and honestly, with this chaotic start to the day, this is exactly what I needed.
Absolutely. We are talking about strong coffee.
Now, I have to admit, when I hear instant coffee, I usually, I run the other way. I'm a bit of a coffee snob.
I get it. But this is different. It's premium instant coffee that actually tastes like a traditional brew.
It really does. But the key difference for me is how it makes you feel. If you love that morning caffeine, but you hate the jitters.
Or that midday crash where you just want to find a desk to nap under.
Exactly. Strong coffee is the answer. It's all about the ingredients. It's packed with 15 grams of protein, MCTs, and adaptogens like ashwagandha.
That ashwagandha is the secret weapon. It really is.
Yeah.
It helps balance out the caffeine so you get this clean, sustained energy without that anxiety spike.
It's functional fuel. It's not just a caffeine hit.
Well said. If you want to try it, head over to strongcoffeecompany.com and use the promo code SNARFUL, that's SNARFUL, for 20% off your entire purchase.
All right, let's get into the Morning Star. That's our Snarful Tech article report. We've got 3 big stories connecting the dots today, and we have to start with the money.
Let's do it. So first up, Bitcoin has taken a tumble. On Tuesday, it broke below that $73,000 mark.
That is the lowest price we have seen since, November 2024?
That's right. It dipped as low as $72,884 at one point. And while it has bounced back a little this morning, the overall feeling is nervous.
Yeah, we were looking at a report from Alex Thorne over at Galaxy, and his analysis points to some real structural weakness here.
He's warning that we could even see a drop below 60,000.
And what really stands out to me is the reason why. For years, the whole narrative has been that Bitcoin is digital gold, right?
It's the hedge.
Exactly. It's supposed to be a hedge against currency debasement. When the dollar looks weak or inflation is scary, Bitcoin is supposed to go up.
Right. But that correlation is it's breaking down right now. Actual gold, the metal, is surging. It's doing exactly what a hedge should do.
Meanwhile, Bitcoin is sliding. Thorne points out that it's failing to act as that safety net in this cycle.
And for those who are into the technical analysis, the charts look pretty precarious.
They do. Thorne suggests it might test the 200-week moving average.
And just for our listeners who aren't glued to trading screens, that's a massive long-term indicator. It's basically the average price over the last 4 years. Right now, that's sitting around $58,000.
58,000, that is a critical support level. If it breaks below that, well, that signals the long-term trend might be flipping from positive to negative.
But here's the part where we really need to connect the dots for everyone, even if you don't own a single Satoshi.
This is the so what factor. You might be sitting there thinking, I don't have a crypto wallet, this crash is just noise to me.
But if you have a 401k, a pension, any standard stock portfolio, you are likely exposed to this.
We saw it so clearly yesterday. This isn't just hitting the crypto exchanges. It's dragging down major fintech stocks. I mean, look at PayPal.
PayPal is the perfect example. They collapsed nearly 20% yesterday. 20%. Closed around $42.
Now, to be fair, they also had an earnings miss, so it wasn't only crypto.
True. But the negative sentiment in the crypto market acts like a multiplier. When Bitcoin is down, investors get spooked about anything related to digital payments.
And it wasn't just PayPal. Galaxy Digital tanked about 19.5%. Coinbase, the biggest exchange in the US, dropped around 6%.
These companies are major parts of growth or tech ETFs now. So if you own a mutual fund that tracks the tech sector, your portfolio took a hit yesterday because Bitcoin went down.
The markets are all linked now. It's really incredible to see.
It shows crypto isn't this little isolated casino in the corner of the internet anymore.
Not at all. It's woven right into the fabric of the financial system.
It is. But we shouldn't be all doom and gloom. If we look at the on-chain data, which is basically watching the actual movement of coins on the network, there is a silver lining.
Okay, what's the good news?
The data shows that long-term profit-taking is finally slowing down.
So the people who bought Bitcoin years ago and have been selling to cash out.
Exactly. They seem to be running out of steam. The selling pressure from the old guard is letting up.
So if we do hit that $58,000 mark, that 200-week average, it might not be a total disaster.
A lot of analysts, including Thorne, are suggesting that if it hits that level, it could actually be a very strong entry point for long-term investors. Historically, that line has been a floor, not a ceiling.
So patience is the name of the game.
That's it. Markets flush out the weak hands before they recover. It's a tale as old as time, just with, new technology.
Speaking of new tech and flushing out bad actors, let's pivot to our second story. This one is, to me, even more fascinating than the price action.
The rise of the crypto cops.
Yes. This is a huge story about a company called TRM Labs. They're a startup, and they specialize in blockchain intelligence.
Basically, they help law enforcement and companies track down crypto crime. And business is good.
Business is very good. They just raised $70 million in a Series C funding round. That officially pushes their valuation to $1 billion.
We have a new unicorn in the stable. A unicorn with a badge.
I like that. But what's most telling here is who is giving them the money.
Right. It's not just niche crypto VCs. The round was led by Blockchain Capital, sure, but you also have Goldman Sachs, Citi Ventures.
That is a massive signal. When Goldman and Citi are investing in crypto tracking, it tells you that Wall Street sees compliance and safety as the biggest growth sector in the industry.
It validates the whole asset class. Banks won't touch crypto if they think it's just for criminals. By funding TRM, they're basically paying to build the police force that makes the neighborhood safe for their institutional money.
And they need that police force because the bad guys are getting incredibly sophisticated. We were reading quotes from Ari Redboard, an executive at TRM.
He did not mince words.
No. He called AI-enabled fraud a civilization-level threat.
Which sounds like hyperbole, right? Like something from a movie. But then you see the stats. AI-enabled scams have increased by 500%.
500%. That's terrifying.
It is. We're talking deepfakes of CEOs ordering wire transfers, automated phishing scripts. The barrier to entry for being a cyber criminal has never been lower because AI does all the heavy lifting.
But TRM is actively stopping it. The case studies in this report, they read like a true crime thriller. Let's talk about Operation Lusocoin.
This was a massive operation down in Brazil, a money laundering scheme moving about 50 billion reais. That's roughly $9 billion US dollars.
$9 billion. That is staggering.
It's a fortune. And they were using crypto to hide it. TRM Labs provided the software that let Brazilian authorities trace those transactions through the whole blockchain maze.
And the result wasn't just digital. They seized luxury cars, properties, jewels. They dismantled the entire physical operation.
And that really busts that old myth, that crypto is anonymous and perfect for crime.
Exactly. It's the opposite. The blockchain is a public ledger. It records everything forever. If you have the right tools, you can trace money in a way you actually can't with cash.
Cash leaves no trail. Crypto leaves a permanent one.
And it's not just white-collar crime. This next case, this one really shook me. The Grindr gang in the UK.
This is a truly disturbing one.
Yeah.
Criminals were using fake profiles on the dating app Grindr to lure victims to a meeting.
Thinking they were going on a date.
Exactly. And when they arrived, they were assaulted, held captive, and forced to transfer their crypto holdings.
That's just horrific, weaponizing trust and technology in the worst possible way.
It's nightmare fuel. But here's the twist. Because they stole crypto, TRM Labs was able to trace the funds from the victims' wallets straight to the criminals' accounts.
So the very thing they stole became the evidence that locked them up.
Correct. The gang members got over 78 years of combined prison time. Without that blockchain analysis, it would have been so much harder to prove.
And there was a similar case here in the U.S., right?
Yes, a ringleader named Remy St. Felix. He was doing home invasions, targeting high net worth individuals, forcing them to empty their crypto accounts. TRM tracked the money. He was sentenced to 47 years.
It really reframes the whole narrative. The police of the blockchain are becoming just as valuable as the currency itself.
It's the maturation of the industry. You can't have mass adoption without mass safety. And TRM Labs hitting $1 billion valuation proves safety is now a premium product.
Speaking of maturing and fixing broken systems, let's move to our third story. This one is for the gamers, but the business lesson applies to everyone. We're talking about Epic Games.
Specifically, the Epic Game Store. If you play Fortnite, or really any PC games, you've probably used their launcher. And for years, the consensus has been, well, negative is an understatement.
People hated it. It was slow, it was clunky, just missing basic features. But in a move you almost never see, Stephen Allison, the VP at Epic Game Store, did an interview and just dropped the PR spin.
He did. He admitted, quote, the launcher sucks.
I love that. Not we're facing optimization headwinds, just it sucks.
It's so refreshing. He acknowledged it's slow, lacks social features like profiles and chat, everything gamers have been saying for years.
So the obvious question is, why? Epic makes billions from Fortnite. They have the resources. Why was their store so bad for so long?
Allison actually gave a really insightful answer. He explained that when they launched, their entire focus was on developers, not players.
Right, the famous 88-12 revenue split.
Exactly. Steam takes 30%. Epic said, we'll only take 12, leaving 88% for the creators. To make that work, they had to pour all their engineering talent into the back end, the seller side of the marketplace.
Which makes sense as a business strategy to get games on the platform. But it meant the buyer experience, the launch we all use, was neglected.
It was a trade-off. But now, they're pivoting. Allison said they are pulling the guts out of the software and rebuilding it from scratch.
So when do we see the results? Promising a fix is one thing.
They're on tight timeline. He said we should see significant speed improvements by May or June of this year. So just a few months.
And what about the social stuff? Because for me, that's the biggest miss. I want to see what my friends are playing.
That's coming in Q2 as well. They're rolling out community spaces, avatars, and cross-platform chat. They're basically trying to turn the store into a social network, like Steam.
There is also a mention of a forum-type experience later in the year, which feels like a bit of a throwback.
It does, but I think it's smart. Discord is great for real-time chat, but it's terrible for archiving information. Old-school forums were amazing for strategy guides and deep discussions.
It all connects back to the theme of the day, really. You can burn cash and chase growth for a while, but eventually you have to build a product that actually works. You have to mature.
That's the through line. And admitting it sucks is the first step. It builds trust. I think gamers will be much more willing to give them a second chance because of that honesty.
Absolutely. Transparency goes a very long way.
Well, before we wrap up and send you off into your Wednesday, we have one more sponsor we want to tell you about. And with the weather clearing up here, I know a lot of you are thinking about hitting the golf course.
If you are, you need to check out Skoni.
That's Skoni, S-K-O-N-I. We've been looking at their shoes, and they've really nailed that crossover between performance and style. They look like high-end casual sneakers, but they've got the grip you need on the course.
You can wear them to the course, play around, and then head straight to dinner without changing your shoes. And we've got a deal for you. Use the promo code SNARFLE at checkout for 15% off your entire purchase.
You can find them at skoni.com.
So let's recap the dots we've connected today. It's been a wide-ranging conversation.
First, the markets. Bitcoin has slid to its 2024 lows, dragging giants like PayPal and Coinbase down with it. It's painful, but the data suggests we might be nearing the end of the profit-taking phase.
Second, the Wild West of crypto is officially being tamed. TRM Labs is a new unicorn backed by Wall Street, using AI to track down billions in laundered money and put violent criminals behind bars.
And finally, Epic Games is growing up. They're admitting their launcher sucks and promising a faster, more social experience by this summer.
Which leaves us with a thought to chew on. We often romanticize the early days of tech, the chaos, the breaking things, but are we entering a phase that's actually better?
A phase where the tech is stable, users are protected, and companies are accountable. It might be less exciting than the boom times, but it's definitely more sustainable.
I think so too. Well, that is it for us today. Thank you so much for tuning in to Connecting the Dots.
We're here to help at Snarful, so reach out on our website if you have any more questions.
Have a great Wednesday, everyone.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.